Maverick traders, welcome out to your market roundup for April 3rd. Corey here with you. Let's jump into the markets and take a look. The markets continue this theme of pushing higher, even though there was the quote-unquote bad news of the banking crisis. And that's, like I've talked about the past couple of weeks, it's just a market tell. When you can push higher through bad news, that means there's more to go, there's more power, that sentiment has to shift back, that shorts are caught on the run and there's a short squeeze happening and so on. And it takes some time for this to play out. So it continues. The Dow up about 1%, everything else about flat. Oil was up big. We'll talk about why. Gold slightly higher. Advanced decline line, it was about 50-50 today. Bulls and bears. The 50 MA continues to improve. It bottomed out with about 18, well, I think it was 15% of stocks above their 50 MA at the bottom. When we looked at it a couple of weeks ago, it was 18%, but starting to turn better. Last week we saw improvement. This week we saw improvement. So notice more stocks are now getting pulled up by the NASDAQ, by the markets, and there's a recovery in place. On the daily news, it was all about oil. Oil exploded higher as OPEC announced a surprise production cut. If they're going to supply the market with less oil, well, that means equal amount of demand but less supply. Prices tend to go up. Oil was up about 6%, and the entire energy sector was up about 4% on the day. So while that might have been a little short-term, take the money and run, take profits on a short-term bullish trade, on a longer-term basis, the energy sector is one of the only, well, it's the only sector that we can say is in more of a bull market long-term. It traded around its 200-day for a few weeks there a while ago. It's recovered above that, and it still, if you look at it on a long-term chart, it's really the only sector that has maintained that longer-term uptrend. A lot of these other sectors are going to try to do that. They're short-term uptrending, but energy has sort of maintained that throughout. The S&P 500, you can see the recovery, the break above the 50 MA, and it's just a telltale sign. When you think about sentiment, sometimes people just get overloaded, and too many people thinking the same thing creates that sentiment risk. So if you were to go out and ask 10,000 random strangers in the past couple of weeks whether it was a good idea to buy stocks, every last one of them would have said no, be careful, banking crisis, and so on. And that tells you something, that everyone is pessimistic and negative and expects the market to go lower, and yet the market kept pushing higher. And that creates an effect in trading where when everybody's leaning one side but the market starts to go the other, it's like dominoes. Now as the market goes higher, people have to cover shorts. It creates liquidations of the short side, which to cover a short, you have to buy back the shares and so on, and it fuels more of the upside move. So as we've talked about, good price action, even with quote-unquote bad news, tends to lead to higher prices. And the NASDAQ has been pulling the rest of the market up. You even had a little mini cup and handle here in the NASDAQ. And if you look at the QQQ chart, we stalled just temporarily right up there. See the little cup and handle? This doesn't happen every time by any means, but I happened to buy that one pretty darn close to the lows. Now, again, I wasn't really so much thinking that I was buying the perfect low, but just trading a pattern. I could measure from here to here and the size of that cup. I knew the handle would usually be about 30% of the size of the cup, and right down here was about a 30% pullback of the size of the cup, and so it worked. It worked for a trade to the upside. That's basically looking at the market saying, okay, let me take my opinion, put it on the side, and just look for setups that make sense on a risk to reward basis. And I tend to like to fade sentiment when prices are moving that way. I always tell the story of, this was years ago in the energy market, and when oil first started to decline, this was way before we saw oil turn negative in the futures around COVID. This was well before that. Oil started to plummet. and it went below $100 a barrel, then 90, and below 80. And everyone you talked to said, oh, oil's going to go back up. And I remember I was at early morning basketball. And at the early morning basketball, there was a dentist there. And he said, he knew I worked in the financial markets. He said, how do I buy oil? Can I get into the futures? How do I play it to go back up? And I thought, well, it's anecdotal. But everybody around said, oh, yeah, oil's going back up. And these are not people that pay close attention to the markets, right? This is just public sentiment. And then I went to Thanksgiving, and a brother of mine, no real involvement in the financial market, said, oh, oil, it's going to go back up. How do we play it to go back up? And everyone around Thanksgiving, oh yeah, it's down now. Oil prices are down. The pain at the pump is down. Gasoline prices are not that expensive, but we're going to go booming back up. So how do we play it? And I mentioned this at the time to our Maverick traders, and I said the sentiment is so positive, yet the price action is so negative. Trust the price action. And in fact, it creates a huge opportunity. What transpired over the next few years was far worse for oil than I could have ever imagined, because from those 80s and 70s, it went down to the 60s, 50s, 40s, and was trading right around there even before COVID. When COVID hit, then it plummeted 30, 20, 10, eventually went negative, which some people didn't even know oil futures could go negative. And that was people paying others to take the oil delivery instead of them having to take delivery. So that's maybe the best example I can come up with where universally everyone thought oil had to go back up, and yet the price action was going down. This is a little mini example of that. But if I was to go to Thanksgiving dinner, it's not Thanksgiving time, but if it had been, and we were talking about the banking crisis, everybody at the table would have been negative and said stocks are in trouble. And if I went to early morning basketball, the dentist and everyone else would have said stocks are in trouble. So anecdotal evidence, of course, it's not, but you can picture it on a larger scale. If you were at Times Square and talking to people about the banking crisis and whether they were excited about stocks, they would have been overwhelmingly negative, and yet stocks were going higher. That creates huge opportunity. So as we look at the heat map, you can see healthcare stocks strong, but the big outperformance came from the energy space. Now, the production cut is probably not something that's like a huge game changer for oil, but it is an unknown unknown. It was not expected. It was not planned for. OPEC somewhat caught the markets off sides on that. So there's a big reaction. And now there can be follow through because it's certainly not priced in unless it all got priced in one day. And so energy, again, on the dips probably looks like another area that we can focus on for more opportunities. As we look at the outlook, you're above the 50, above the 20. They're still sloping sideways, but certainly a lot of technical recovery has been happening in stocks. Let's look at a few names that are interesting. So on the bullish side, I'm going to start with something of a weird potential idea. This is Activision, and Activision is at 85-ish dollars per share. It's due to be bought out at 95 by Microsoft. So the only upside is about $10 per share. But there's an agreed to buyout, and it looks more and more like the deal is going to go through. Sort of hard to trade because the options are not super liquid, but I was looking at just different strategies, such as maybe buying the 87.50 and selling the 95. I certainly like selling the 95 calls. I think the deal gets done in the next couple of months. Therefore, this has some nice risk to reward. It's not a huge potential payoff, but you could potentially buy call spreads targeting 95 if you agree that the deal is likely to be done. If the deal falls apart and the stock goes plummeting lower, there's not a huge downside risk. And this would be arbitrage, basically, where you know the stock is going to be sold at 95. You can set that as your short option, and you're buying a call that's somewhere below it, such as if I buy the 85, sell the 95, I own that call spread. I don't want to pay more than half of the spread for sure. So I don't want to pay over $5 for an 85.95 call spread. If I could pay $3, $3.50, maybe up to $4 and so forth, then I'd be possibly interested, because I think, again, the deal is going to go through. So it creates an interesting opportunity. Oracle has recently broken out above resistance, as you can see. Looks like we're going to go towards 100, and $100 per share is this big whole round number. It creates a psychological level that's often targeted, and when you're in the low 90s like this, it can have a gravitational pull, sort of like when oil was going up towards 100 a barrel for the first time. It was like gravity pulling it towards 100. Or gold prices, when they first went to 1,000, they kind of spiked up there to 1,000 and then they plummeted back down. Oracle looks like it's got 100 in its sights. Next, we've got Pepsi. Pepsi has been on a big run. There may be a little consolidation in here, but I would expect more follow through. The momentum, the strength, everything looks good, and it has broken out. So until you see a big sign of exhaustion, looks like Pepsi is one you can buy the dips on. On the bearish side, shorting the railroad stocks looks really interesting to me. CSX, these all popped up on my scans and really looked compelling. A shooting star bearish reversal candle at old support, new resistance. CSX looks like it could go lower. Notice bigger volume on the way down, light volume on the rally. NSC, Norfolk Southern. This one's been in the news, big deterioration, a bounce back, but lighter volume on the rally, just what a bear rally pattern tends to look like. So NSC, CSX, these rails look like they're going to trend lower going forward. And then last but not least, PayPal. Even with all of the bullish market environment, this thing just cannot get out of its own way. Sort of a descending triangle at the top end of the range, may go back towards the support and even through that support. So short-term target would be around 72. If you wanted to be more aggressive, you'd probably looking at 68 or thereabouts for a multi-month move. But ultimately, PayPal looks like it should maintain its downward trend. Stocks are holding up really well. Prices are up strongly since this banking crisis began. And like we talked about last week, it probably is over, frankly. Seems crazy to say that, but it's probably over. If there's not continued runs on the banks and so forth, then it's over about as quick as it began. Bad news and bullish price action. Trust the price action. Payrolls out on Friday. Very odd with the markets being closed for Easter, but that's the way it's going to be. So that brings a little bit more of a gap potential on Monday. And then earnings, there's really nothing out there. Constellation Brands and ConAgra, but earnings really start next week. So it's a quiet period that way. Hope you enjoyed the market roundup. Have a great rest of your day, and we'll see you next time.